Do you ever feel like your paycheck vanishes into thin air before you can even enjoy it? And when you think about retirement, does it feel like you need a mountain of cash just to live comfortably? Well, I've got some incredible news for you. You don't need millions to leave your current job behind and build a secure future. Today, I'm going to reveal how investing just $100 a week into Schwab U.S.Dividend Equity ETF can not only solve your paycheck woes, but also set you up for a retirement where you're earning over $200,000 a year in dividends. That's $17,000 plus a month. Stick around, because I'm also going to show you how this small weekly investment can grow into a portfolio worth over $2 million. Let's dive in. Welcome to the Trade Savvy Academy. First off, what is SCHD? It's the Schwab U.S.Dividend Equity ETF, launched back in 2011, and let me tell you, it's become a fan favorite among dividend-focused ETFs. Why? Because SCHD is all about investing in rock-solid U.S. companies that have a proven track record of paying and growing their dividends. It's the perfect mix of stability from big, established companies and the potential for long-term growth. SCHD tracks the Dow Jones U.S. Dividend 100 Index, which handpicks its companies based on strict rules. It's designed to give you steady dividend income while also letting your investment grow over time. What makes SCHD so special is its smart approach to dividend investing. Instead of chasing risky, high-yield stocks that might slash their dividends when times get tough, SCHD focuses on quality. It picks companies that have been paying dividends for at least 10 years straight. These companies have growing dividends over time and are financially healthy. Think strong return on equity and solid free cash flow. This means you're investing in businesses that are built to last, giving you peace of mind and a reliable income stream. So, who's in SCHD's lineup? We're talking about heavy hitters like PepsiCo, Pfizer, Home Depot, Cisco Systems, Lockheed Martin, Verizon, BlackRock, and Texas Instruments. These are industry giants with decades of dividend growth under their belts. For example, PepsiCo, Inc. year's payout ratio is 75.47%, which means that 75.47% of the company's earnings are paid out as dividends. The Home Depot has been boosting its dividends for 32 years. Pfizer, a pharmaceutical leader, and Texas Instruments, a tech powerhouse in semiconductors, are also in the mix, offering both stability and growth. SCHD spreads its investments across sectors like financials, healthcare, consumer staples, and tech, so you're not putting all your eggs in one basket. This diversification helps shield you from big losses if one industry takes a hit. Now, let's talk performance, because SCHD has been crushing it. Since its launch in 2011, it's delivered impressive returns through both capital growth and dividend income. Over the past 10 years, SCHD has given investors a price return of over 120%. Sure, that's not as high as the S&P 500's 200% over the same period, but here's the kicker. SCHD offers a much higher dividend yield, making it a dream for anyone who wants steady income while growing their wealth. Right now, SCHD's dividend yield is around 3.55%, and its 5-year dividend growth rate is a whopping 12%. This metric reflects how quickly the ETF's dividend payouts have grown annually over the past 5 years, making it one of the strongest dividend growth ETFs in the market. For long-term investors, SCHD is a no-brainer. It may not match the S&P 500's explosive growth, but its blend of income and growth makes it a fantastic choice for building wealth steadily. But here's the million-dollar question. Literally, can SCHD help you hit a six-figure portfolio? Absolutely, and I'll show you how your $100 a week invested into SCHD can get you there, plus generate over $200,000 in annual dividends. One reason SCHD performs so well is its focus on high-quality, dividend-paying companies. These businesses are financially sound and stable, which helps protect your investment during market downturns. Plus, SCHD has a super low expense ratio of just 0.06%, meaning more of your money stays invested, and its volatility, lower than the broader market, with a beta that keeps price swings smaller, making it a less risky option. As of now, SCHD is priced at $28.50 per share. Don't worry, that price did not crash. They recently did a 3-for-1 stock split in October, bringing the price down from $85.02 to about $28.34. This split doesn't change the value of your investment, it just makes the shares more affordable by giving you more of them. SCHD also has a price-to-earnings ratio of 5.42 and a price-to-book ratio of 2.85, which is solid compared to the broader market, showing it's not overpriced. With its focus on fundamentally strong companies like Home Depot, Cisco, PepsiCo, Amgen, and Chevron, SCHD is built to weather market storms. Now, let's get to the exciting part. How can $100 a week in SCHD eventually replace your full-time job income? It's all about consistency and the magic of compounding. By investing $100 a week, you're not just banking on the stock price going up, you're also building a growing stream of dividend income. As the companies in SCHD keep growing and increasing their dividends, your income grows too. Over time, this steady investing, paired with dividend growth, can lead to massive wealth. The secret sauce? Reinvesting your dividends. Instead of spending them, you buy more shares, which then generate even more dividends. It's a snowball effect that can lead to exponential growth in both your portfolio and your income. Let's break down the numbers to see what $100 a week can do for your financial future. It might not sound like much, but consistency is key. That $100 a week adds up to $5,200 a year. That's 100 multiplied by 52 weeks. Now, let's say you start investing $100 a week into SCHD. Here's what your future could look like. Assuming a 7.5% annual share price appreciation, 12% is expected annual dividend amount increase, and annual dividend yield of 3.5%. For the year 2024, the most recent SCHD dividend yield paid was actually much higher. They paid out 3.77%. To calculate the following, we will use the portfolio dividend calculator from MarketBeat. After 5 years of consistent $100 weekly contribution, your portfolio could be worth $32,677. After 15 years, it's up to $203,963, all while you've only invested $78,000. That's when the gap between what you put in and what you have starts to widen dramatically. After 20 years, your portfolio value rises over $437,000, earning you $34,734 in annual dividends. But here's the real kicker. If you hold steady for another decade, your portfolio could explode into something you'd hardly believe. Ready for the jaw-dropping reveal? Fast forward to 30 years, and your portfolio could be worth $2,242,780, with your total investment at just $156,000. Yes, your portfolio could be worth over $2.2 million. But here's the part that'll blow your mind, and that's the yearly dividends earned. By year 30, you could be earning over $200,000 in annual dividends. That's right. By the time you retire, you're bringing in more dividends each year than your initial investment over the entire 30 years. That breaks down to over $16,000 a month. Let that sink in. $100 a week invested in SCHD could give you more than enough to replace your full-time job income. Imagine retiring with that kind of cash flow. Over $16,000 a month could be your pension, giving you financial freedom without ever worrying about cutting back on your lifestyle. Since you made it to here, I'd like to present you something at no cost. If you're interested in my free live equity and options alerts, along with other latest market insights and information, you can follow me on Twitter at options_Ricky24. I do not charge for any services. So, what are you waiting for? Start investing $100 a week into SCHD today and watch it transform your financial future. If you found this video helpful, don't forget to like, subscribe, and hit that notification bell for more tips on building wealth. Let's make your retirement dreams a reality. See you in the next video.